Good morning. 10:48 a.m. Pacific Standard Time. Dow is down 273 points. Nasdaq 100 down 82 points. Nasdaq Composite down 108. S&P at this time is coming down to 1745, down 37 handles. Yes, it's here and it's truthful. The thing about it is that we had clearly said on stockmarketfunding.com that these markets were not going to be the same. We're not saying that they're totally in a bear market because we're not saying that. What we are saying, though, unlike in year 2013 at every market top, we had called for a bottom. And one of the things that you will listen to and learn, if you're serious, you're going to go over here and you're going to click on what the Dow readings were over here. You are going to find out who had the truth before the fact on the S&P here and the Dow. Simply type in the search box DOW or S&P and then hit go. You'll get all that live analysis. Most importantly, though, let's take a look at the following. Let's just take a look. Go to the free trial tab. Get started right now. That's all you got to do. Go to trading. Open an account. Yes. Read the page. Yes. Listen to the videos. Yes. Open an account. Read the content. Yes. Get started. Yes. You do belong in the next bull run. Right now, I can say that if your account doesn't have 25,000 in it, you can't do a lot of trading, and you know it. And I know it. So here's the 25-20 rule on the things and what happens in all your retail software. Well, no, that doesn't cut it either. So let's take the advantages and the benefits that you received today and understand why we said that this big move was coming down. And why was it that we've been waiting for 415 days? Yeah, you heard me. 415 days for a 10% correction. Yes, and then at some point it was going to come. And yes, it started the January effect, which was quite different than the last period. And we all know that. And right now, we're getting an unwind in this Nasdaq and this composite. Yes, there will be things on sale at the right time. Yes, you have a lot of opportunity. Just remember, I told all of you that you could not buy in January. Today is February 3rd, 2014. Get your shopping list together because all the big money had to have a reason to get in. And if we don't get big down days like today, that big money on the sideline that's already been cashing in doesn't get back into this market until we get a couple of more days of volatility where you want to throw up and can't handle it. Then we know we would be looking at a bottom. Not only that, we told you what the fear indicator said. We told you that the VIX was going higher, that was a complacency level. Nobody had any fear about these markets, not one individual. And what I'm going to tell you is to get your buying shoes on, get together right here, right now, stock market funding. We'll do our best to help you, okay? You can get a free trial. You can listen and look at all the live videos. Go ahead. 274 points down right now, 10:52 a.m. 10:52 a.m. Date 2003-14. One of the things I wanted to make clear, I made an error. 2 February 3rd, 2014. So, once again, 2/3/2014. One of the things that we're considering right now, and we're being very thoughtful about the mathematical short-term oversold on this S&P 500. Now, that 1740 call, which is a monthly on the S&P, was priced at $61 on Friday's low. Today, one thing that the MMTs will know is that the high was only $42. Look at here. So we got to go from 42 to 30.55. And we are going to put our limit order out at 24.7. The chart behind me is a monthly chart starting on 2/1. And 2/1 started with a high that was about the end of January's lows right here. So if we do continue to sell off, we will be able to get hit down there, and that's where our risk would be at this very moment. The 10-month simple is at exactly 10-month simple 1717. The daily chart, we can clearly see that we are breaking below that 100-day at 1769, and that the 200-day daily simple is at 1707, which means that the monthly is roughly 10 handles above that 200-day simple on a daily chart, versus, once again, that the monthly S&P, as we can clearly see, is at 1717. The 1740 call contract would be worth the value of this bid here and now. That bid will go here, and we're going to give a conservative move, because if someone drops below the handle, we are going to give a bid of 22.7. That's based on another round of selling in the last hour, which is 28 minutes until that last hour. And we will come back and we will see where we're at live here in that last hour, but we'll go ahead and put the limit order out there where we are definitely wholesale. The thing to take into consideration at the very moment is the $42 is the high. That's roughly a $20 gap down in that 1740 call, the way that we opened up on February 1. Well, it's the first trading day. Today is the 3rd of February, first trading day of February 2014. We will go ahead and hit our buy for now at 22.7. We are definitely going to be wholesale if we get one more leg down going in that last hour, and or we will make our adjustments based on the daily and the monthly moving averages. And here we go. Okay, that order is live in the marketplace right now at 22.7. Here we go right now, 11 minutes after the hour, and we're down 317 on the Dow, 41 on the Nasdaq composite. 112 on the Nasdaq composite. Look at this, S&P, 41 points down. No one has seen this at all for quite a long time. But the problem is that the bull had too much exuberance. And exuberance does have a set of consequences. These are your consequences for irrational exuberance. 15 minutes after hour, 45 minutes to the close, with the Dow at 292, Nasdaq composite at 1744. There is a little bit of volatility and a little bit of bargain hunting right now going into the 45-minute closing bell. Here we go. We're in the last hour. One of the things that we're showing is the ETF on the Spider SPY at 188 million shares with a 174 low with a 178.37 high, and it's a reflection of the S&P 500. Here we go. It looks like the S&P closed down 40 handles, 326 on the Dow. Once again, the S&P really took a bloodbath. There was a lot of sellers going into the close, and I would just like to say the following is the fact that we could show you the Nasdaq composite, and we're on the lows of the close of the Nasdaq composite. So here is the Nasdaq broke and violated all its moving simple day moving averages, and we can clearly see that the market was long overdue. We already know what the Dow just did. It fell below the 200-day simple moving average. Not only that, when we take a look really at the S&P 500 recap, look, It too is headed on its way to test the green line down here. That's the 200 simple day moving average. Everybody will stay tuned around the world that's watching. It's very important that you realize that to get your shopping list ready, because Twitter is coming up on its earnings in the next couple of days. We're going to conclude the fact that the Dow is down 328 handles. The Nasdaq composite was down 106. What a big haircut. Look at that. It was actually, and it's below that 4,000 psychological level. So we'll see everyone tomorrow. You're updated on what you should be updated on, and you're breaking all the key moving averages. But once again, every new bull has to have a bear setup to get to another bull.